Welcome to Wealth Hustle 247 podcast, your trusted guide to financial literacy, business innovation, and entrepreneurial success. Learn how to grow your wealth, make informed decisions, and turn your ideas into profitable ventures.
Ready to take your investments to the next level? In this episode, we're covering the Online Investment Research Guide, the best tools and strategies to help you invest smarter. Let's get started.
Welcome to our deep dive on researching investments,
Yeah.
especially using all these online tools that are out there.
Yeah.
You shared some really great resources for us to look at. And, well, to be honest, this is a topic that I'm always trying to learn more about.
Sure.
Investing can feel like this really big, complicated world.
Absolutely.
But, with the right kind of approach, it doesn't have to be so intimidating.
No, not at all.
So,
Informed decisions, I think, are really at the heart of it all. And,
Yeah.
being able to make those informed decisions is key to success.
right. So let's jump right into your guide then.
Okay.
And it seems like a really great place to start is with step one, which is all about defining goals and understanding, how much risk you're comfortable with. And it seems pretty basic, but I can definitely see why this is the foundation for pretty much everything else.
It's like planning a trip.
Right? Yeah.
You wouldn't just hop in the car and start driving.
No.
You want to decide where you want to go.
Yeah.
You want to figure out what kind of roads you're comfortable driving on.
Sure. Yeah.
And
Okay.
investing is similar to that.
Mhm.
Your goals are your destination. So are you looking for long-term growth or maybe a steady income or just preserving wealth?
Right.
And then risk tolerance, that's like understanding the terrain. Or
Yeah.
are you okay with some bumps along the way, or do you prefer a really smooth ride?
Okay. That's a great analogy.
Mm-hmm.
And your guide even recommends some interesting tools to help us figure this out.
Yeah, risk assessment calculators.
Okay.
Like the ones from Vanguard and Morningstar.
Right.
They ask you some questions about your finances and about your timeline and how you feel about potential ups and downs. And then
Yeah.
based on your answers, they kind of generate a risk profile that
Yeah.
can guide your choices.
Okay. So now we've got our destination and we've got our roadmap.
Exactly.
So, step two is where it gets really exciting, right?
Okay.
This is where we start identifying different investment vehicles.
Yeah.
So your list is super comprehensive here. Stocks, bonds, real estate, mutual funds, ETFs, even cryptocurrency and alternative investments.
That's right.
It's like a whole world of possibilities.
Mm-hmm. It is.
So let's start with stocks.
Okay.
They represent ownership in a company.
Yes.
When you buy a stock, you're essentially betting that that company is going to be successful. If the company does well, the value of your stock goes up.
Right.
You might even get dividends, which is a share of the company's profits.
That's right.
But stocks can also be volatile.
They can.
So what does that mean? What does that mean, like, practically speaking?
Well, think of a roller coaster.
Oh, okay.
That's kind of what the stock market can feel like sometimes.
Hmm.
Volatility means that the price of a stock can go up and down.
Okay.
And sometimes really quickly.
Yeah.
So while that creates opportunities for maybe big gains, it also means there's a risk of losing money.
Okay, so maybe not the best option if you need quick access to your funds, or if you just don't like risk.
Exactly. And that's where bonds come in.
Okay.
Bonds are more like loans
Okay.
that you make to a company or to a government. And they generally offer more stability than stocks.
Yeah.
You're promised a fixed interest payment over a set period of time.
Okay, so bonds might be good for someone who's looking for a more predictable return.
Yes.
And a little less risk.
Exactly.
Maybe someone who's closer to retirement.
Yeah, it's all about finding that right balance for your own personal situation.
Right.
So then we have real estate,
Yeah.
which has always been a really popular investment.
Mm-hmm.
It's a great way to build wealth,
Yeah.
but it's not as simple as just buying a stock or buying a bond.
Yeah, it seems like real estate requires a lot more hands-on involvement, right?
Yes.
You're not just buying like a piece of paper, you're buying a physical property.
Exactly. You're dealing with things like property management
Yeah.
and maintenance and tenants.
Yeah.
It can be a lot of work,
Right.
but it offers some unique benefits.
Like what?
Rental income,
Okay.
potential appreciation in value,
Yeah.
and even certain tax advantages.
So if you're looking for an investment that generates some passive income and you're willing to put in the effort, real estate could be a really good choice.
It could.
Okay, so what about mutual funds and ETFs?
Okay.
These seem to be everywhere these days,
They are.
and they seem like a good way to diversify without having to choose like individual stocks and bonds.
Absolutely. It allows you to invest in a whole basket of assets all at once.
Mhm.
So stocks, bonds, all at once. You get a little bit of everything, and
Yeah.
that helps reduce risk.
Okay, diversification. That's
Mhm.
definitely a word that I'm going to have to add to my investment vocabulary.
Mm.
Okay, so then we have cryptocurrency and alternative investments.
Yes.
Cryptocurrency is like the new kid on the block, right?
Yes.
It's definitely getting a lot of attention,
Yes.
but it's also super volatile, right?
Very volatile.
So it's really important to understand those risks before jumping in.
Absolutely.
Okay, so maybe not for the faint of heart.
I don't
And
think.
then alternative investments. What even falls under that umbrella?
Well, it's a wide range of things.
So-
Commodities like gold and oil,
Mm.
tangible assets like art,
Yeah.
and even things like private equity.
Okay.
They can offer unique diversification,
Yeah.
but they often require kind of specialized knowledge.
Yeah.
And they may not be as easy to buy and sell as like a stock or a bond.
Okay, so I'm really starting to see how each investment type has kind of its own personality.
Yes, they do.
And so it's really important to research each one and
Mhm.
consider your own goals and how much risk you're comfortable with.
Absolutely.
So step 3 of your guide
Yeah.
focuses on staying updated on market trends.
Mm-hmm.
And it seems like the financial world is constantly changing.
It is. It's fast-paced.
So how do we even begin to keep up with all of that?
That's a great question. Your guide mentioned some great platforms.
Oh, okay.
Bloomberg, CNBC, the Financial Times.
Okay.
You know, they all provide news and analysis on just tons of financial topics.
Okay, so those are great. But even thinking about trying to read all of that every day makes me feel a little overwhelmed.
I understand.
Yeah.
There are ways to be more targeted with it.
Okay, good.
Setting up Google alerts
Oh,
for specific investment types or sectors that you're interested in
yeah.
that can be really, really helpful.
Okay, so instead of trying to absorb everything, we're being proactive.
Yes,
And we're curating the information that we need.
exactly.
Okay, so even with all this information, it's easy to kind of get caught up in the hype
Right.
or the latest trends.
Absolutely.
So how do we make sure that we're developing kind of a critical eye
Mm-hmm.
and we're not just making impulsive decisions?
Well, you want to develop your own informed perspective.
Okay.
You know, don't just take everything at face value. Think critically about what you're reading.
Right.
Consider different viewpoints.
Yeah.
And ultimately make decisions that feel right for you.
Okay, so it's about being actively engaged
Yes,
and not just passively following the crowd.
that's right.
Okay, that's great advice. So we've set our goals, we've figured out how much risk we're comfortable with.
Right.
We've explored all these different investment options. We've talked about how to stay informed.
Yeah.
So now let's get into the nitty-gritty of actually analyzing investment performance.
Okay.
This is steps 4 and 5 of your guide.
Yeah.
And I'm seeing tools like Yahoo Finance and Google Finance.
Yes.
And even Zillow for real estate.
Mm-hmm.
Seems like there's a tool out there for everything.
There really is.
It's incredible.
It's amazing how much information is available.
Yeah.
Whether you're looking at historical price data or researching rental yields for a
Mhm.
property or understanding market trends for a specific industry, it's all there.
It's like having a whole research department at our fingertips.
Exactly.
But your guide also emphasizes focusing on key metrics
Yes.
like returns, volatility, and liquidity.
Right.
So can you kind of break those down for me?
Sure.
What do those actually mean?
Well, returns are simply the profit that you make on an investment,
Okay.
volatility that measures how much the price fluctuates,
Mm-hmm.
and liquidity that refers to how easily you can buy or sell an investment without affecting its price.
Okay, so if I'm looking for an investment that's easy to sell,
Mm-hmm.
I would want to prioritize liquidity.
You would.
Okay.
And if you're comfortable with a little more risk and you're seeking higher returns,
Yeah.
you might consider something with higher volatility,
Right.
but you're also, increasing the risk of loss.
Right. So it's all about understanding those trade-offs
It is.
and finding what aligns with our own goals and how much risk we're comfortable with.
Exactly.
Okay, this is all making a lot more sense. I'm feeling a lot more confident already.
I'm glad to hear that.
So step 6 focuses on evaluating fund managers.
Okay.
So this is especially important for those who are interested in mutual funds
Mhm.
or managed portfolios.
Yes.
I'm seeing tools like Morningstar mentioned here
Yes.
and the fund's own website.
Right.
So if we're thinking about investing in a mutual fund or an ETF, it's not just about looking at the fund itself.
That's right.
It's also about researching the people behind it.
Exactly. It's like checking the credentials of the captain of the ship.
Right, exactly.
So past performance doesn't guarantee future results.
Of course, yeah.
But looking at a fund manager's track record, how they've handled different situations, and their overall philosophy can give you some really good insight.
So I'm seeing the pattern here. Informed decisions require research at every level.
They do.
Okay, now for a topic that seems a little daunting, assessing economic and political conditions.
Yeah.
This is step 7.
Okay.
To be honest, this feels like a whole other world.
It can feel that way.
Yeah. How do we even begin to understand all these like macro factors and how they could potentially affect our investments?
Well, things like inflation and interest rates and GDP growth and employment data,
Yeah.
they all influence what happens in the market.
Okay, so we're kind of zooming out here
Yeah.
and looking at the bigger picture.
That's right.
But can you give me like a concrete example of how one of these things might actually affect my investments?
Sure. Let's take inflation.
Okay.
Inflation is basically the rate at which prices go up.
Right.
So if inflation is high, it can erode the purchasing power of your investments.
Okay.
So let's say you invest in a bond
Yeah.
and it's paying you a fixed interest rate of 3%,
Okay.
but inflation is running at 5%.
Okay.
The real return on your investment is actually negative
Oh, wow.
because the value of your money is decreasing faster than the interest that you're earning.
Okay. So even though I'm earning interest, my money is actually worth less over time because of
Yeah.
inflation.
Exactly.
Okay, that's a really good example.
Mhm.
So where can we find all this information?
There are some good resources out there.
Okay.
There's FRI, the Federal Reserve Economic Data website, and Trading Economics.
Okay.
They're both really good resources.
Great. So those are good starting points.
Mm-hmm.
Okay. So we've tackled goals, risk, all those different investment types, market trends, financial analysis,
Yeah,
and now we're even starting to explore the macroeconomic world.
right.
Are we ready to actually start investing yet?
Almost.
Okay.
There's one more step before we jump into the real world,
Okay.
and that's online investment simulators.
Online investment simulators? What are those?
Well, think of them as like a safe space
Okay.
where you can experiment
Okay.
and test your strategies without actually using real money.
So it's kind of like a dress rehearsal for our investment journey.
I like that.
So there are simulators on Investopedia
Oh.
and Stock Trainer
Okay.
that let you create these mock portfolios.
Mm-hmm.
You can buy and sell virtual stocks
Yeah.
and see how your decisions would have played out,
Okay.
under real market conditions.
That's amazing.
It's a fantastic way to learn,
Yeah.
to make mistakes,
Mm-hmm.
and to build confidence.
Right. So we can try out all those different strategies.
Yes.
We can make mistakes and learn from them without having any real world consequences.
Exactly.
What a brilliant idea.
It is a good way to practice.
Yeah.
And you can tailor the simulation to your own personal goals and risk tolerance.
That's amazing.
You can choose different types of assets, different time horizons, different investment amounts.
So if I'm like a cautious investor, I could start with a pretty conservative portfolio of bonds
You could.
and maybe gradually add stocks as I get more comfortable and gain some experience.
That's right. And if I'm more adventurous, I could maybe explore cryptocurrency trading strategies.
You could.
Or even dabble in some alternative investments.
Exactly. The possibilities are endless.
It's like a virtual practice ground.
Mm-hmm.
It takes a lot of the pressure off
It does.
and makes learning about investing a lot more approachable
Absolutely.
and fun, which is great.
It should be fun.
Yeah, okay, so we've covered so much already,
We have.
but it feels like we're just getting started.
We are.
So what else awaits us in the next part of our deep dive?
We'll get into community
Right.
and shared knowledge.
Okay.
And we'll explore some of the more advanced tools like AI and robo-advisors.
Sounds good.
We'll also talk about choosing a brokerage and making that investment plan a reality.
I am ready to keep learning.
All right.
This is so much more engaging than I ever thought it would be.
Good.
So I'm really excited to see what else we discover in the next part of our deep dive. Okay, so we've really dug into setting our goals
Mm-hmm.
and figuring out how much risk we're comfortable with.
Mm,
And we've looked at all these different investment options.
right.
We talked about how important it is to, stay on top of those market trends.
Yeah.
And we've even gotten into using some of those online tools to analyze investment performance.
Mm.
Now I'm ready to dive into some of those, really advanced tools and resources like AI-powered platforms and robo-advisors. They sound super futuristic.
They do sound very futuristic.
But they're becoming more and more common, right?
They are, especially in the investing world. AI especially can be incredibly helpful when you're trying to analyze just huge amounts of data and really trying to identify potential opportunities.
So it's like having a supercomputer kind of crunching all these numbers and spotting trends that we might not even see as humans.
That's a great way to put it.
Really? Okay, so AI can sift through all this information and find those patterns or signals that could be a good investment opportunity.
Right. It can highlight things that we might miss.
What? But it's still just a tool, right?
It is.
It doesn't replace actually doing the research.
Exactly. And using good judgment.
So it's about using AI as a guide, not just blindly following it.
Exactly.
What about robo-advisors?
Okay. Yeah.
They also seem to be gaining in popularity.
They are very popular, and for good reason.
Yeah, what are they exactly?
Well, they're basically online platforms that use algorithms to create and manage investment portfolios based on, your goals and your risk tolerance and your time frame.
Okay, so it seems like they kind of take the guesswork out of investing.
They can, yeah.
By automating the process.
Yes.
Are they a good fit for everyone, though?
They can be a good fit for a lot of people, but it really depends on your needs. If you have a complicated financial situation, or you really prefer a more personalized approach, then a human financial advisor might be a better choice.
Okay, so it sounds like robo-advisors and human advisors could actually complement each other.
They can.
The robo-advisor kind of handles the day-to-day management, and then the human advisor can provide more strategic guidance and some personalized advice.
Right. It's about finding that combination that works best for you.
Okay, so these advanced tools can really streamline the whole investment process.
They can, yeah.
But your guide also talks about the importance of community and shared knowledge.
Yes.
Which seems kind of like the opposite of relying on algorithms.
That's true.
Step 9 mentions, platforms like Reddit and LinkedIn groups.
Yeah, they're great resources.
So what's the value of tapping into these communities?
Well, it's a chance to connect with people. To ask questions. You can share ideas, learn from other people's successes and mistakes.
It sounds like a great way to get different perspectives
and
insights that you might not find anywhere else.
Right. You get exposed to different ways of thinking.
Yeah, but you also mentioned that we need to be a little skeptical.
We do.
When we're navigating these platforms.
Yes.
And why is that so important?
Because not all advice is created equal.
Right, of course.
Everyone's financial situation is different. Yeah. So what works for one person might not work for another.
Okay, so it's about using these forums as a sounding board. Gather different viewpoints.
Right.
But ultimately make decisions based on our own research and understanding.
Always double check information with reliable sources.
Yeah.
And you can always consult a professional for more personalized advice.
Okay, that makes a lot of sense. So now let's get into the practicalities of actually executing our investment plan.
All right.
Steps 11 and 12 focus on evaluating costs and choosing a brokerage.
Right. Very important steps.
Yeah. I'm realizing there's a lot more to consider than just the investments themselves.
There is, yeah.
So what should we be thinking about when we're evaluating different brokerage platforms?
Well, you want a platform that's easy to use,
right,
that you can understand.
Right.
You also want to look at the fees they charge, the investment options they offer, the quality of their customer support, and any other features or tools that are important to you.
Okay, so it seems like there's a lot to compare.
There is, yeah.
Are there any resources that can help us with this?
Yes, there are.
Okay.
There are websites like NerdWallet and Investopedia that offer comparison tools.
Okay.
So you can look at different platforms side by side. They'll break down fees, features, all those key factors to help you decide.
That's super helpful.
Yeah, it makes it a lot easier.
So again, it's about doing our research,
It is.
whether we're choosing investments or even just picking a brokerage platform.
That's right. It's all about being informed.
Okay, so we've done all this research.
Yeah.
We've chosen our investments.
Yeah.
We've picked our brokerage.
Mm-hmm.
We're ready to click that buy button now, right?
Not quite yet.
Okay.
We have steps 13 and 14
Yeah.
to remind us to double check everything.
Okay.
And to monitor our investments.
Okay.
Investing is a marathon, not a sprint.
So even after all this research and all these decisions, the journey isn't over.
It's not. It's ongoing.
Yeah, we need to, stay vigilant,
Mm-hmm.
double check our facts,
Yeah.
keep an eye on how things are performing.
Exactly. The financial world is always changing.
Right.
So you have to be willing to adapt.
Yeah. But how do we stay informed without getting overwhelmed?
Well, there are some tools that can help.
Okay.
Personal Capital, Mint Your Brokerage's app.
Right.
They can all track your portfolio's performance
Yep.
and give you updates on the market.
Yep.
You can also set up email alerts
Right.
for specific things that you want to track.
Okay, so it's about being proactive
Mm-hmm.
and informed,
Mm-hmm.
but not letting the market just consume our every thought.
You got it.
Yeah. Finding that balance is important.
And if we ever feel lost or overwhelmed, there's always step 15,
Yes.
seeking professional advice.
Mm-hmm. Having an expert on your side can be really valuable.
Yeah, it's like having a trusted advisor to help us navigate all this complexity.
Exactly.
Yeah, okay, so we've covered a lot,
We have.
from setting goals and understanding risk
Yeah.
to exploring all those different investment options,
Right.
analyzing performance, choosing a brokerage, and even seeking professional advice.
It's really clear that investing is a journey.
It is.
It takes careful planning and research and a willingness to learn and to adapt.
Absolutely. You've summarized it perfectly.
Well, thank you.
Yeah.
I think the biggest takeaway for me is that the most important investment we can make is in ourselves.
You got it. In our own knowledge and well-being.
Right, exactly.
Yeah.
I really appreciate it.
Of course.
And remember, everyone, the most important investment you can make
Yes.
is in yourself.
In your own knowledge and your well-being.
That's right. Keep learning, stay curious, and most of all, happy investing, everyone.
That's it for today's episode of Wealth Hustle 247. Be sure to follow, like, comment, and share with others. Keep pushing toward your goals, and we'll see you in the next episode.